Samir Arora joins us now. Let's take the conversation forward. Samir, so good to have you back. Thank you for joining us. What is your sense, Samir? Are we in for a good year? Are we in for a flat year? Or are we in for a scary year?
We don't know, but all we know is that right now is not necessarily a good time to overly analyze it in the sense that there are so many events that are in the short term negative to overhang on the market, and I think we should let some of these play out. Over and above this Iran situation, we have the budget, which we think will be a big disappointment. We have telecom issues, we have funding issues, we have slowdown issues, we have unrest issues, and we have bond issues, and we have loss of confidence issues. So all these things will take time.
Given your budget verdict, Samir, saying that budget will be disappointing.
Budget, I think originally before all these things happened, I thought that budget was the biggest negative that was there in this market because of the excitement that was built on how this whole world is waiting for this budget to bring up with a magical solution. And I thought that government doesn't have that many options.
Samir, a very basic question which I was pondering over when I looked at the data is that in last 10 years, gold and Nifty has given the same returns. If I bought into gold, I didn't have to bother. I mean, no stress, nothing to focus on, no oil, no Trump, nothing about Indian politics. Just buy gold, store it. It's a 150x. Nifty is given the same return. So what's going on?
The point is that because we all beat the Nifty, that's why we are in business, and by a big margin. But the point is that broadly you are right, because gold is to be viewed as even more than that. Gold is viewed as a hedge if something goes really wrong, if the currency in India weakens. So it's like buying an insurance, which even without there being very many obviously negative events, had a good return. And if there had been any big event, negative event, it would have even outperformed more. But Indians are innately so brilliant that they've been buying gold as a way to, I think, bypass foreign exchange restrictions as one point, without realizing it maybe, because so many people who own it may not be bothered what is happening to dollar and rupee and all that. But that is how the wisdom of the masses comes in.
But Samir, there's got to be a way to treat this event right now, right? I mean, with all the headlines that you yourself reiterated, the GDP projections that we saw yesterday, and God knows for the year ahead as well, it seems like we're going to struggle around that 5% mark. And with the turmoil which is going on back home and now globally as well, the impact of inflation which is yet to hit us, etc., etc., etc. The list of problems is long. Do you try and capital protect? I mean, do you profit take from those 15, 20 names which have made you money in the last 3 to 4 years?
So, because we have various funds, we are talking here about a long short fund where we are not taking profit from those names, but we have shorted everything else that moves. And in the long only product, we have about 15, 16% cash, which we plan to look at after the budget. That's what I thought a few days ago. In middle of December, when I realized finally that this budget is a big negative and not a positive, that I will look at investing that few days or immediately after the budget or on the same day, depending on what they do. But I broadly now have been given more time to relax.
Okay, so how is it that you're making use of the time, Samir? I mean, when that correction plays out, do you buy more of the same, the expensive, good quality names, or do you hunt down and get into more of the bottom-up stories?
Few of those, after the tax cut, thinking that this market will broaden. So we bought maybe 7, 8, or 5, 7 names, small amounts like 2% each or even 1.5%. And some of them did really well, like going up 30% between September and December. And so some we sold off, some we have. Right now, from the new group, which has some of those names. So, unlike people who buy only 15 names and 10 names because they think that God has whispered in their ear what to do, we normally own 30, 35 names. So we already have a mix of things which are not doing well and we had them for long, or we bought new, or things which we bought new and have done well. So right now, whether I will buy a 36th name, I will not buy. From my current universe, I have to buy. But before that, I have to cover my shorts. because the main fund is the long short fund, and that there is no need to do anything. There's no need to cover any short.
Okay. Fair enough. You said the budget this time you're expecting it to be a bit more of a negative. Samir, if you just talk us through that a little bit more. Of course, we all know the challenges on the fisc, but the government has been trying so hard to assuage industry fears, get leaders to lend, to try and really get things going. Obviously, it hasn't been enough. But how much of a damn squib are you expecting the budget to be?
I think it'll be a damn squib unless they do some out of this thing like long-term capital gains going to zero, knowing that if they are reversing their stance, they know that they will not lose anything, and even if they don't gain anything, it will be still a big boost for the short term to the market, which can help raise some new capital. But my thing was that I was very bullish till early December on the basis that the corporate tax rate cut is a big event. It's a very big event, and it's obviously a direct benefit to the stock market, and that it would be accompanied over time with other events, other policies and measures that the government can take. Now, whether it is their fault or not, we don't know in some sense, but broadly the government has no room to cut aggressively personal taxes, to give tax cuts, and on the margin, not because of as a policy, but because of lack of choices, there is, on the other hand, need to raise money. And I don't consider, for example, if you say I will not increase GST rates, but I will just make it tougher to evade. For me, it's the same thing in the short term, because the guy who's evading is not some billionaire. He's some trader who's saving a few rupees and basically a few crores even, and basically having the ability to buy cars with it and buy houses with it. In the end, you are basically taking money from the public, whether it is stopping of evasion or it is actually a tax hike. So I don't see the difference. Secondly, when you cut corporate taxes, obviously the corporates will not like the idea that the income tax department is told that, by the way, you are still supposed to raise the same amount of money, which effectively means some way or the other you have to get this money back from the same audience. I also feel that the telecom price hike is actually a tax hike, because the telecom price hike ultimately is to be paid back to the government through this AGR. So therefore that opportunity has gone away of hoping for tax cuts. Now, the other things that we look in a budget, which we call a good budget, is if they announce divestments. Now, here already divestments are announced and have to happen. Normally, the budget is considered good if it announces infrastructure investments or rural India investments, and then for a few hours, those stocks go up and down. Here, infrastructure, we already know that they have announced. So therefore, I feel that this overhype on budget will be a disappointment. But on the other hand, if the market falls for these reasons that are currently there before the budget, then maybe the budget will not be such a big negative.
Budget away, Samir. Let's keep the budget away. The more I talk to people, the more I'm realizing that yes, budget is important but not crucial. Let's talk about next 3 years, Samir. You always have championed buying mega trends, whether it was IT, private banks, logistics names, you bought into insurance. Let's talk about a 3-year kind of a scenario where you think that valuations are decent, earnings is there, and the sector or that company or that business either will gain market share or others will get disrupted and this will become bigger.
I can talk about 3 years, but the reason I don't talk about, I will talk about it, but the reason why I emphasize on now is to, in a sense, we all should put pressure on the system. I think the fund managers take it too easy by basically trying to ignore the current issues and saying in the long term equity makes money, which by the way, every kid knows now, I hope. Anybody who's gone somewhere near the market, that over the long term equities make money, but deliberately the system, as in the system of fund managers and investors, come on TV and say, in the long term, it is in India's fate to grow at 7%, and therefore equity is better and stuff like that. I think that we know, and that if that was the question, we should come only once every 3 years and give you the same line. So that is why I deliberately emphasize the immediate and now, because we should all, in a sense, give feedback to the system at large that there are things that are not right and they can be put right. Now, coming to 3 years, of course, you wake me up while I'm sleeping and say what will happen in markets. I will say they are great because we have 100 years and 200 years of data. We have data. If you invested before World War One in Japan, before World War Two in Japan, you still did better in Japanese stocks and Japanese bonds over the next some 15 years. If you invested in US in 1929 October before the crash started, you did very well, but it took 20 years. So nearly over every market, over slightly longer period or normal period, equity does better. And India, same thing will happen. We also don't want every story to be sold on a 3 to 5 year basis because there is a limit to how much patience foreign investors or even Indian investors may have. In the last 10 years, we have massively underperformed nearly everything that we could have underperformed. And so we must look at short and long term together, I think, from a system point of view.
Is the we all want things to improve. We all are optimists. If things improve, it's good for the country, it's good for people's wealth, and it's good for everybody. But what are the chances that 2020 may actually be not a bad year, but a very disaster kind of a year? Oil is boiling, fiscal deficit is going to be missed, rupee will weaken, frankly, capex is not picking up, and the slowdown, Samir, started in middle of last calendar year. We were not using the word slowdown in April or May. We only started using the word slowdown in July and August. Right now, we're starting the year with a, on a back foot. So we have a full year of problem now to deal with.
No, it doesn't. The problems don't have to happen on a calendar year basis. So that is more to do with time. So that's what I agree. I mean, I hope it's not a disaster because in some sense, the market at least has already, effectively, it's a disaster in the market if you leave out 20 names. If you don't look at index, but say companies that are doing badly, is their stock up or even normal? No, some 80% of the stocks might be down, God knows, 30-40%. And so the ones which are up have actually got decent performance. Maybe their valuation is out of line. So in that sense, it's not that we are at all-time high and then today seeing a problem. It looks like that, but I think we are not at all-time high for anybody other than somebody who has 5 stocks and who for 6 months may be doing well in life. So broadly speaking, the market at least is reflecting it. Now, economy itself could be at these 5% levels for 6 months, 9 months more, and that is what government has to do. From our side, as in investors, we would think that after X number of months, let's say 3 to 6 months, your base comparisons will be very easy, that your interest rates may have been down and maybe would have seeped through. If the world is okay, then you would still be getting part of that flows as we got last year. And life will move on, but it is not the best time ever to have, to buy stocks is today. It is not that way. It's okay, we wait for these events and negotiate them. But broadly, if you do very big picture top down, then you can say that, yes, equity does better. So you should average, which I agree with totally because I am a total equity guy. And that we won't know when it will turn, but it will turn because that is the history of the equity markets across countries, across years. But if you precisely say right now, why today, I would say if you're already significantly invested, you can wait for what happens to Idea Cellular, how we deal with telecom, how we deal with the budget, and then plus minus a few weeks of that, whatever these events, including the Iran issue, either would have blown up and hopefully it would not have blown up, so that would have subsided, and then you start again. It's a continuous investing thing rather than saying this point is some great point because the market fell 2% in this month or something. That's all I'm saying.
Just to get an idea thematically also where your thoughts are right now, where, if you are going, when you're looking at the short side, would it be on the rich consumer names? Would it be on the expensive mega caps? Thematically, what are you looking at?
So on the short side, we have everything. Actually, long side, we have few things. But some of them are also consumer expensive names where the company is saying there is slowdown, and they're parents fall and everything falls, but Indians say, no, we know it. I don't know. There's so many of these where there is obvious slowdown, which is, the companies themselves are saying. But when we are in a bullish phase, we say we already know it. But knowing is not enough, I think. I don't believe every day that everything is discounted. I have never believed it because I say that for 20 years, we are using exactly the same line to buy private sector banks, that they are competing with state-owned banks. For 20 years, not one guy has a new line other than to say that we are competing with state-owned banks and we are winning market share. And basically those stocks have outperformed, even though not even one new line is added to it. So I don't believe I can even sell or buy where yesterday some bad news came and it fell 5%. Doesn't matter. This will take months to resolve whatever is happening on either the slowing down or the good companies. So it's very easy to actually do both sides, according to me.
All right, just a quick word on financials, Samir, before we wind up today. But the overall weightage of financials has gone up, let's say, from 25 to 40%. Do you see a risk of them underperforming now going forward?
Well, we also have more than 40% of our long portfolio in financials, and if we looked at our net, it might be 80%. So we don't believe, because again, individually these stocks look good, and I don't think that the weight is a good way of analyzing. So for example, the biggest private sector banks are not in the MSCI index, and most of the money comes into India via, at least the foreign money comes via MSCI index. So at the time when suddenly HDFC Bank's weightage was reduced from the biggest company in India to zero, it was done over 4 quarters, I think in 2013. The stock still outperformed. And in some sense, everybody who owns HDFC Bank or Kotak Bank actually are taking a bet against the index because the index does not have it. So in the end, in some big picture, you can say, how can weightage be over 40%? Because historically, that higher weightage has meant that something else happens. But not all sectors are even represented in the stock market. So some people I read say, oh, real estate weightage in India is very low. It is wrong. Therefore, these stocks have to go up. But that is because 97% of real estate is not reflected in the listed stocks, because real estate is done by every contractor and every fellow in your neighborhood. So many of these things are not represented. What to do? It does not mean that the index is good or bad. Anyway, we are not giving up our financials so easily.
Samir, thank you for joining us, and good to get your perspective on things as they stand currently.